Okay, let's talk about something super frustrating. You see a stock breaking out, you jump in, and bam, it reverses and stops you out almost immediately. Sound familiar? It's a classic trap. Well, in this explainer, we're going to build one simple, step-by-step strategy to help you finally tell the difference between a real breakout and a fake one. Let's get right into it.
You know, if you feel like breakout trading is just this chaotic, overwhelming mess, I get it. You're not alone. You see that price start to move, you feel that FOMO kicking in, you buy, and then you're instantly underwater. It honestly feels like you're missing some secret piece of the puzzle, right?
Well, here's my promise to you today. We are going to focus on just one clean, simple, and rule-based strategy. Seriously, if you can just master this single setup, I guarantee you can eliminate at least 80% of the confusion and frustration that comes with trading breakouts.
All right.
Step 1. It all starts here with the foundation. You have to understand that a breakout is only as good as the level it's breaking from. If you get this step right, I promise you, everything else becomes 10 times easier.
So what in the world makes a level clean? Well, first, it needs at least 2, but preferably 3, really obvious touches where the price came up, hit it, and backed off. It should be so obvious that a 5-year-old could point it out on the chart. We're trying to avoid those choppy, messy areas with a million random wicks piercing through. Think of it like a clean, solid wall, not a flimsy fence. Let this be your new mantra. Seriously, burn this into your brain. The cleaner the level, the more eyeballs are watching it. We're talking big institutions, algorithms, everyone. And when more people are watching, the reaction when it finally breaks is way more powerful and trustworthy. The takeaway? No clean level, no trade. Simple as that. Okay, so you found your beautiful clean level. Now what? We can't just jump in. We need confirmation. We're looking for 2 very specific signals that scream at us, hey, this breakout is the real deal. And those signals are the power candle and a big surge in volume. So what's a power candle? It is exactly what it sounds like. It's a candle that shows pure conviction. We're looking for a big, fat, wide body that closes way above our resistance level. And you want to see tiny little wicks, which tells us there was almost zero hesitation from the buyers. They were in complete control. Let's put these side by side so you can really see it. On the left, that's our hero, the strong breakout with that big, confident body. But on the right, that's the villain, the weak breakout. See that thin little body? Maybe it's a doji, which looks like a cross. That signals total indecision. It's often a trap designed to suck you in right before the price collapses. Now for the second part of our confirmation, volume. And the rule here is super simple. The volume on your power candle absolutely must be significantly higher than the average volume of the previous 20 to 25 candles. This is our proof that the big money, the institutions, are jumping in.
Remember this. Volume is the fuel. It's the gas in the tank that powers the move. Without a big spike in volume, the breakout is just noise. It's one of the oldest and costliest tracks in the book because it shows there's no real conviction, no real money behind that price move.
So we've got our clean level, we've got our confirmed signal with a power candle and volume. Awesome. Now it's time to actually plan the trade. Because a great setup means absolutely nothing without disciplined execution. Let's lock in our rules for getting in and getting out. Now, you basically have 2 choices for your entry. The aggressive way is to buy the second that power candle closes. It's fast, but it's way riskier. The safer method, and the one I can't recommend enough, especially if you're starting out, is waiting for the retest. This one act of patience can literally filter out more than 70% of those nasty failed breakouts. So what does a perfect retest look like? The price smashes through our level, then it gently pulls back to kiss that old resistance line. This is the big test. Will the old ceiling become the new floor? We want to see volume completely dry up on that pullback, which shows sellers are losing interest. Then, as it starts to bounce off that level, we need to see volume pick back up. That bounce is our golden entry signal.
And what about protecting yourself? Your stop loss. This has one simple mechanical rule. Find the most recent little dip, or swing low, right before the breakout and place your stop just underneath it. This gives the trade a logical place to breathe and prove you wrong without being too tight.
But, and this is a huge but, if you do the math and placing your stop there means you'd lose more money than your plan allows, you have to skip the trade. End of story. No setup is worth breaking your risk management rules. Your number one job as a trader is to protect your capital. We've covered our entire offensive game plan. Now, let's talk defense. Because honestly, knowing what not to do is just as important as knowing what to do. Let's go over the most common traps that absolutely crush new traders.
Hey, do these look familiar? They're the exact opposite of our rules.
entering on a weak, indecisive candle, ignoring the lack of volume, chasing a move way after it's already happened, risking way too much, and just being impatient and trading every little wiggle you see. If you can just avoid these 5 mistakes, your results will improve dramatically, I promise.
Okay, so how do we pull this all together and make sure we're executing flawlessly every single time? It's simple. We use a pre-trade checklist. Think of it like a pilot's pre-flight ritual. Before you even think about clicking that buy button, you're going to ask yourself 3 simple questions.
Number 1, the level. Is this thing clean and obvious to everyone? Number 2, the signal. Do I have both a power candle and high volume to confirm this thing is real? And number 3, the risk. Is my stop loss placement logical? And more importantly, is the risk affordable? That's it. That is the entire game plan. And this right here is the most important rule of all. If you cannot give a clear, confident yes to all 3 of those questions, you do not take the trade. Period. No exceptions, no negotiations. This discipline is what separates the pros from the amateurs.
Because you have to realize, at the end of the day, trading isn't about the adrenaline rush or the excitement of a fast-moving stock. It's about the boring, consistent, disciplined application of a proven process. The market rewards discipline. It punishes excitement.
So, what's the big takeaway from all of this? It's time to flip the script. Stop chasing every little move you see on your screen. Instead, you define your rules, you build your checklist, and you patiently wait for the market to bring a perfect A+ setup to you. Let the breakouts follow your rules, not the other way around. And that is how you'll fundamentally change your trading game.